Traders may also want to overlay the Ichimoku Kinko system with various common technical analysis tools. The most common charting tools that traders use are trendlines and common chart patterns, such as wedges and flags. Fibonacci and pivot points can provide some really useful information regarding key levels that most other traders are also looking at. Candlestick formations are another very popular set of price action patterns. Last but not least, major support and resistance levels formed are not to be neglected. We would keep this discussion brief and not go into the specifics of the various technical tools mentioned. Here, we will discuss a case study of incorporating the average directional index with the Ichimoku system. The ADX was developed to determine the strength of a trend and whether the market is trending or not, regardless of direction. The ADX is an oscillator which fluctuates between 0 and 100, with a reading above 20, signaling a trend, and a reading above 40, signaling a strong trend. Here, we show an example of overlaying the Ichimoku with other indicators. When the positive directional indicator crossed the negative directional indicator as shown, and the ADX is above 20, it serves as an early warning. The Tenkan-sen subsequently crossed above the Kijun-sen, further reinforcing this bull trend. Many of you may already have a certain style of trading, or may have some indicators that you analyze. Ichimoku can be easily incorporated into your current trading style and strategy. Another interesting indicator to incorporate with the Ichimoku is the parabolic SAR. Traders commonly use the Kijun-sen as a reference point to set their stop-loss levels. Some traders find the parabolic SAR to be a more conservative stop-loss or trailing stop-loss level. As you can see in the chart shown, after the strong bearish Tenkan-sen, Kijun-sen crossover, we entered a short position. After going short, we set the stop-loss at the parabolic SAR level, as shown. Subsequently, as prices declined, we moved the stop-loss down, corresponding to the parabolic. This trailing stop strategy protects our profit while giving the trade room to run further. Prices then started to bottom out and reverse, hitting our stop-loss level as shown. Here, you notice that, compared to the Kijun-sen, as a stop-loss level, we have locked in much more profits. Now that you understand more about using multiple confirmations, let's move on to numerous other topics from StreetPeeps.com.